thanks for joining the call, everyone. I think most of you should know the format already. Thanks to Paul for sparing a bit of time, and I think there's quite a few questions which we would like to ask Paul after the results and how the financing is going. Without further ado, I'll pass over to Paul, who wants to give us an update. Paul?
Well, first of all, Sergio, thank you so much for organising the call, and thanks to everybody for jumping on the call. And as Sasha says, please do feel free to put your hand up or to chip in at any point. The updates I wanted to give you was in two parts. One was what we're actually doing on the site and the operations in terms of the business itself, and secondly, obviously more pertinently, the financing. So the background, as you'll all recall, was we're looking to build a lithium refinery in the Wilton International Chemicals Park up in Teesside, the Teesside Freeport. We've secured a lease, we've completed a Class 4 study, and we've secured feedstock, which we've announced from Wogan. This is carbonate feedstock from South America. And we've been working with offtake parties for taking off, being the customers for the product at the other end. We've also, as I mentioned, completed the Class 4 study, which has indicated that the capital cost of the project is around $300 million US. So we've gone to our bond financiers and said, would we be able to bond finance this? They've come back in writing and said, yes, this is very attractive to them. It's in the lithium, it's in the UK, it's got the kind of customer base that they'd be looking for. But they've said you need to do two things. One is you need to secure your feedstock on your offtake with counterparties that we're comfortable with, and you need to complete a feed study, take it from the Class 4 study all the way through to the completion of front-end engineering design. So we've done the first bit. We've secured the feedstock, as I mentioned, through Wogan, and we've secured, this is just on train 1, which is 24,000 tonnes per annum. We've secured 2 to 3 times the offtake volume that we are designed to produce for train 1. So, and these are with high quality counterparts, tier 1 corporations. Some of you know who they are, but they are very, very high quality customers. And so it now leaves us to the final work that we have to do, which is a feed study. For those of you not familiar with the feed study, it's a front-end engineering design. It basically takes the engineering and turns that into a reality. The reality is we have to go to equipment manufacturers and suppliers and contractors and subbies and basically get firm prices and fabrication slots and process guarantees and a whole bunch of other stuff to satisfy that we can build this train 1 to the numbers we're talking about. Once that feed study is complete, we then go to the offtake parties and firm up the offtake arrangements, which they're currently sitting at letter of intents or memorandums of understanding. They say once feedstock's complete, we will then firm that up. We then go to the bond financiers and say, okay, we've now completed feed. These are all the process guarantees, equipment slots, deliveries, etc. We've now got the offtake. We want to draw down the bond finance. The bond financier then says, fine, we'll do 60% of the $300 million. So we need to put equity alongside that. And we've had preliminary discussions with parties who are saying they'd be very interested to put the equity in. One key thing to remember, this is all at the TVL level, Trees Valley Lithium level. It's not at the Alkemy level. So this is a private financing at the asset level. It's not at the Alkemy level. At that point, then we need to get from where we are now, which is to the end of the feed study. We need around $8 to $10 million US to do that, and that's what we call the mezzanine financing. And many of you know that we are working on the mezzanine financing, and the way that works is that it will be a loan or an investment at the TVL level that will fund the $8 to $10 million to get us through the end of the feed. The upshot of the $8 to $10 million and the equity investment, that is the equity, the $120 million of equity that sit alongside the bond, will mean that Alkemy will dilute down from its current 100% ownership position in TVL to a lower number. And obviously that's a form of negotiation. When we took onboarded with Zeus, the new broker, they did an initiation report, and they've assumed 50-50. They've assumed that we will get diluted down, Alkemy get diluted down to 50% of TVL. We think we could be down, could be 40%, but it's a sort of reasonable assumption. And on that basis, Zeus have come up with some valuations, which those of you who've seen the valuation report will be familiar with. Basically, they're saying on all those numbers that I've given you, that's the $8 to $10 million worth of mezzanine, the $300 million worth of total financing for Train 1, $180 million worth of bond, $120 million of equity. If that all comes together, then their numbers are, they've got us valued at Alkemy's 50% interest would be valued somewhere between 85 million and 186 million pounds. We've only got 8.8 million shares on issue, so that very, very quickly translates into something close to £10 a share to £20 per share. So that's what we're shooting for Train 1. Obviously, there's Trains 2, 3, and 4, and there's graphite as well, but we sort of put those to one side and said, we've really got to make Train 1 happen at the moment. So we're currently sitting here with a market cap of £5 million, and we're struggling in the equity market. Clearly, the equity market's not there for us for a whole bunch of reasons that people on the call may be familiar with. It's a tough time for juniors. But the last thing we want to do is issue shares into a weak market and have the stock diluted. So we are going to finance the company, as we have been in the past, through loans, so G&A loans. So the amount of G&A, general administrative costs, that we need is in the hundreds of thousands of pounds. We're not drawing any salaries. We are lending money ourselves to the company. As in the case of a lot of startups, it's the directors who are the initial funders of the company, and that's certainly the case. But we think that once we get to mezzanine financing, Zeus organized this around 20 institutional meetings over the past couple of months. They've been very, very positive. Around 75% of the institutions came back and said, great story, guys, too small for us right now, too immature, but if you get to mezzanine financing from that point onwards, we'd be very interested in your story. So we think where we're sitting at now is we are going to have to continue to debt fund the company through directors' loans, through third-party loans. We're not going to do equity issuances at this level. And the big milestone coming up is for us to get from where we are here now is to mezzanine finance, which will take us through the feed study, then through to the bond financing. Sasha, I wonder whether that's a helpful introduction to an update on the story. We can talk a little bit more about the financing and accounts if you wish, but I think it's pretty obvious that when you're debt funded, you don't sit there with a balance sheet full of cash. You do what many companies do. You simply draw down on loan funding to pay the bills. Obviously, when you've got such a small number of shares on issue, you're very, very highly geared to share price movements. It doesn't take much to move the share price, both down and up. And clearly, people see opportunities to sell the stock down and then buy it back at a lower level. So part of our strategy, unfortunately, leaves us exposed to this until we've got our main financing in place and we get past this vulnerable period that we're in now to the highly leveraged position we get to when we're in the mezzanine financing and the main financing. So
yeah,
not
Paul,
sure. I should stop there and take some questions.
Yeah, look, I'll just say I think that that the biggest fear is always from investors getting the rug pulled out from under them in a discounted equity issuance, right? So thank you for that reassurance. I've got one question come in. Can we have some hands raised or some questions in? Because otherwise it might be a very quick call. But let us know if you're unhappy or you'd like some further details. I've got a question from Matt. So when Paul says struggling with the equity market, is he referring only to the poor Alkemy share price or the appetite for the 40% equity raise to fund TVL?
Good question. No, it's not. Funnily enough, it's a good question, Matt. It's struggling at this level, this conversation. So holders holding small amounts of shares, dribbling shares into the market, whilst when we need to raise the institutional equity, which I think we're referring to, the $120 million, we have quite a lot of interest, a lot of interest at that level. So strangely enough, I was talking to a shareholder just earlier today, it's actually easier to raise $300 million than it is to raise $3 million in this market. So definitely not struggling at the institutional level. It's this appetite for the stock on market pre-mezzanine finance right now is the battle.
Okay, I have a few hands raised. Bob Hope, would you like to ask a question?
Yeah, hi Paul. Hope you can hear me. Thank you very much for the update. I'm just wondering, why did the company not raise before these results were announced, knowing from experience, especially with Pensana in the past, that the share price would suffer badly and potentially if the equity raise is the only funding that's available and potentially not a loan, then why not raise in advance of the results? Because from what I heard, you previously tried to get loan funding before the last equity raise, and even the loan wasn't available to you then. So what's the options if the loan isn't available?
Well, the options, just to reverse, good questions. Appreciate the questions. Why didn't we raise? Because we don't want to issue equity. I mean, that's the bottom line. We're going to continue to keep this company as tight as we possibly can. Now, I think we've all had experience of companies that have blown out their share capital by issuing equity. And yes, I know it's painful looking at the share price, but the bottom line is we've got 8.8 million shares on issue, not 88 million, not 888 million, not 8 billion, just 8 million, less than 10 million shares on issue. And the prize for that is, if we get it right, the leverage goes the other way. We get any kind of buying, and the stock, I mean, Zeus have got us on a valuation of £10 to £20 on train one. So there's no point in diluting at this level. It's very, very painful. So yes, we are stretching the friendship, shall we say, pushing things to the limit so that we don't have to issue equity. Your question about whether debt funding is not available, well, it always will be available, because basically, in the final instance, I'll put the money in, as I've done with Pensana. I put £1.2 million into Pensana or something. So, I will stand behind these relatively small amounts of money. We're talking hundreds of thousands of pounds here to fund this story, rather than unnecessarily issuing stock. And to be frank with you, the kind of people who take stock in these issues, the stock goes up 25% or 50%, they tip it back out again, and it gets you absolutely nowhere. So we're taking a fairly brutal approach to this and saying we treasure our shares greatly, and the less we have on issue, the more valuable they are. And if that means we've got to put our hands in a pocket and continue to fund the company till we get the mezzanine across the line, then we'll do that.
That's understandable, but I suppose we could have done that before the results, right? Because knowing from Pensana in the past, the share price has, Pensana last time was 60 pence when the results were announced, and investors could see there was no cash, and it's never really recovered since. And luckily, your major investors supported you at 20 pence when the share price was much lower.
Yeah, I hear that argument, and I'm sympathetic to it. I am, but frankly, Pensana's drawn down a $15 million loan and is funding the development of the project. It's got a $236 million financing in place. None of that is coming from equity investors in London. Nothing. And that's the point, is we're saying to you is the equity market in London is, for the junior end, is disaster. It's just not there. So why bother feeding the equity market in London when you can get money from major shareholders? We're simply saying to you is this is a terrible market. It's just giving people shares in this market. They'll just tip them straight back out again. I was the fundraising we looked to do not so long ago, and institutional investors came and bid us a 50% haircut, knowing that the moment they got the stock, 2 weeks later, they would have tipped the stock out and taken the turn. No interest in that whatsoever. We will continue to fund the company going forward. Yes, it's painful in terms of you look at the share price, but eventually, as Fidelity and others say, value will out. We land the mezzanine financing, and we're on our way. We get going. So, yeah, don't want to. The moment you spend your life as a junior company trying to grow, dealing with bucket shop equity investors who are just going to trade your stock, you may as well. You're not growing a business anymore. You're just feeding the market.
I understand that. I suppose the point that I was making, and I'll move on from it, is that if we were going to get a loan, it's better to do it before the results are announced, because we know what the we know what the outcome is once people can see there's no cash there. So now we've got to recover the share price losses. I suppose it just dents a lot of confidence from the investor perspective. But I'll move on from that.
So no, I accept that, and I'm completely accepting that's the price you pay for this model. But ultimately, you get the model right, and then people recognise you're not going to issue shares. You're going to go on a do deeply discounted issues, and then the shares have more value going forward. And ultimately, we'll get to £10 by not issuing shares. We won't get to £10 by issuing shares. That's really what we're saying to shareholders. And along the way, we'll keep demonstrating, as we've done with Pensana, is major shareholders will fund the story going forward.
No, I understand that. I suppose in the last raise you did try the loan option. It didn't work, and there was a discounted placing that needed to be done. We'll see what happens on this front. But
well, there is. Yeah, I accept all of that. I accept it. It's been a battle, as I said to you. Is that you talk to investors and they say, "Yeah, we're a long-term investor. Yes, we'll take the stock and we won't tip it out." 4 weeks later, they've tipped the stock out. It's just So we're a bit jaded with listening to people telling us we should be raising money from the equity market. It's not. It's just a churn. We're looking at other options.
Yeah, no, I agree
options, frankly. It's a terrible market out there, and people can make a turn in 2 weeks. They'll do it, and they're gone. That's not how you grow a business. And that's not how we're going to get to £10.
No, I understand that. With regards to the mezzanine facility, then previously it sounded like you were quite advanced earlier in the year. It still seems like you've the conversations are still quite advanced, and you're making some progress. And I suppose, if I understood correctly, if you manage to get that mezzanine facility across, then your cash burn's quite low, and hopefully that allows you to fund your working capital from that as well. So, do you have any timelines on that mezzanine facility?
Yeah, so a really good question. So that's the key. Obviously, putting small amounts of G&A in through loans is helpful, but what you're talking about now is the absolute key. Yes, we need to put that $8 to $10 million. It's actually $8 million into the company, and we're talking to a number of parties about that. One of whom is quite significantly advanced, as in documentation advanced. We've shared the documentation. Keep Zeus updated on a regular basis, and I can't give you any timelines because they're very hard to land. But we're not far away. We'd like to think that it's not too far away. when it lands, we'll announce. But I can't give you any timelines, obviously, on this call. But yes, we're working on it. And you're right, that's absolutely the key. Not the G&A and this raise and discount issues. That's not the issue. The issue is what you're talking about. Is if we can land the MES on this and get the feed going, then we're away.
No, that's brilliant. So I suppose you've. I'm just wondering. There's obviously general election around the corner. You would have thought that, especially with ESG so high on the agenda, that there'd be lots of grants and, people. It seems like the government is talking about lots of green things and funding them. Is there no sort of grants available to you?
Yeah, there are. So, and I wish Sam was on this call because he'd tell me whether I'm not sure we've announced it or not. But we've applied for a $60 million ATF grant. I'm not sure we'll get $60 million. It would be a lower number than that, but we've applied for that, and this won't be affected by, we don't think, by the general election. I was in Whitehall with the Office for Investment last week, and they are expecting continuity on this policy, as you're indicating. In fact, I was up on a bus on Teesside the other day going around PD Ports and Wilton, and I sat on I'm not sure there's a good thing about it. I sat in the same seat that Angela Rayner sat in just recently. She's up there with Keir Starmer, visiting all the people that we're working with, and they're very, very supportive of everything that companies like us, not just us, obviously companies like us, are doing on Teesside. So yes, there are. The only problem is that the grants you're referring to, whether it's the automotive transformation grant or grants from the Office Investment or grants from whoever, are all basically post feed. You basically have to put the feed in place, and then they say, here's a grant for, I don't know, £10 million, whatever the number is. I don't know what the number is, but if you apply for 60, they'll cut it back to a lower number. But whatever it is, then it's a loan they give you. It's a grant that is based on money that you spend that they reimburse. There's very few examples where they'll give you money at the mezzanine level for the feed studies. So you're right. It's funny, actually, and as I said earlier on in the call, it's easier to raise $300 million because there's a lot more participants willing to lend you money or willing to invest in the project once you've completed the feed study than there are now at the bit between now going forward. And that applies to government as well, and all those various governments, and they come in the form of a grant. So yes, we're applying for them. Yes, they're out there, but they won't kick in until we get to the end of feed studies.
No, I appreciate that. One last question, if you don't mind, with regards to the graphite. Are you allowed to give any progress updates on the graphite processing facility?
Yeah, so the company is Siva Resources. They're the largest graphite producer in the world outside China. They've just built a facility in Louisiana, and what they've been looking at potential sites all over Europe, and we said to them, hey, look at what we're doing. So they came to site recently. I don't know if you saw the pictures of it. We did a huge show and tell. PD Ports, Semcorp, all the participants, the site, the whole day visit for these guys, and they really liked it. And we're now finalizing the joint venture arrangements with them for us on a 50-50 basis for us to build a facility which will ultimately be bigger than their US facility, and it will be the biggest graphite facility outside, will be one of the biggest in the world. So they're very, very keen. But that's a much earlier stage than Tees Valley Lithium. It's basically it's an unincorporated joint venture to do a study for 12 months plus, and then at the end of the study we have an investment decision whether we want to go forward. But it's just a validation of everything we've been talking about. They've been looking at sites all over Europe, and then they come and we show them what we're doing, and they go, hey, that looks great, we want a part of that.
I appreciate that. Thank you. That's all the questions from me.
Thanks. Very, very good questions. Appreciate that.
Thank you very much, Bob Hope. I've had quite a few questions from Paul, Jordan, Charles, Matt, and a couple of others. So look, don't be afraid to raise your hand and I'll unmute you. I'm going to do another one allowing to talk here, John. asked to unmute. John, are you there?
Yeah, I'm here. Can you hear me?
Yes, I can.
Well, firstly, thanks, Sasha, for organising the call. Paul, thanks for taking, especially at such short notice to speak to us today. And I think just on the funding side, Bob raised the questions there, and personally, I for one couldn't be happier with what you're doing. I mean, to get issuing equity down at this level for corporate overhead, to me, just seems like the wrong way to go. And if you're willing to support it and others through to MES, that's fantastic. So it's great to hear that and have that reassurance. Bob's asked some good questions, so I won't go over all ground. Just one formula was MES previously was around about the $20 million mark, I think, and it got it down to 8. Is that why is that? I guess.
Well. So first of all, thank you. Thanks for your comments, John, and thanks for a really good question. Yes, well spotted. So the way the feed works, feed is really two components. It's all the things I mentioned on the call before. It's all about sorting out the suppliers, the performance guarantees, equipment, fabrication slots, all of that. But there's another component to it as well, which is the pre-order. The pre-orders, you put deposits down on crystallizer or whatever, and that's a lot of money. That's the $10 or $12 million. So we've pushed the pre-order finance into the bond. So basically, we said we're not going to do that as part of MES. We're pushing it into the bond. Still there. It's just that we're not raising it as part of the MES finance. So that's why it's gone from 20 something down to 8.
Okay, and that's not another step that needs to go through. Is it? We get through your feed with 8 without the pre-order. Yeah, I mean, I think it's implied. It's in the bond.
It's a really good comment. It'll delay us, John, because if you pre-order beforehand, then when you get to the end of feed, you're ready to go. If you don't pre-order, you basically got to get the money out of the bond guys and then order. So you lose, I don't know, 3 months or something because you haven't pre-ordered. So, and you're also in danger of not having the fabrication slot locked in or the equipment supply locked in when you want to. So that's the price you pay for not pre-ordering. You are putting yourself at risk of delays because you've not pre-ordered or locked in the pre-ordered piece of kit or locked in the fabrication slot, etc.
Okay. No, I think that's probably I think Bob touched on most things with TVG and TVL and the current funding. So no, thanks, Paul. Thanks, me.
Thanks, John.
Okay, I'm reading the Q&A here. It's all a lot on timing of the mezzanine financing there. Did you go into that, Paul?
Well, we would love to tell you when it's going to happen. If we did, we'd announce it. So MES is and I've obviously spoken to a lot of shareholders over the last 2-3 days. The MES facility is the one we're working on. The one we've got 3 or 4 on the go, but the one that's most advanced, as I say, we've passed the documentation over to Zeus, kept them fully informed. It's potentially close, but I just can't, say when it's going to happen because I don't know. That's the reality. But we are, a long way advanced with one of them and working. There's others that we're working with. So as those of you involved with finance will know, they're never done until they're done. I'm sorry, I just can't give you any timing.
Question from Phil, project level financing. Are you including that in the 4?
I didn't understand the question.
Sorry, project level financing. Are you including that in the 4? Is the question. So presumably you mentioned you've got 3 or 4 things on at the moment.
Oh no, so this is all mezzanine financing. The main financing we're comfortable with. In fact, I'm meeting with the bond financiers on Wednesday, and the institutional equity that goes alongside them. They're there. The offtake parties, they are there. They're all waiting for the feed study to complete. So there's nothing more we can do with them at this point. Is that they're basically saying, "Great, looks great, guys. Really like it. When's the feed going to complete?" So it really distills down to is landing the mezzanine financing to get the feed study done.
Okay. Question from Matt. Is the market opportunity being lithium conversion in Europe still as strong as it was 3, 6, 12 months ago as we wait to finalize the mezzanine financing? i.e., is the delay costing us in terms of market?
Really, really good question. That's a genuinely great question, because everybody else is having even more challenging financing issues than we have. We're being delayed, but if you look at the other companies like AMC in Germany, sorry, not AMC, Rocktech Lithium, Green Lithium, Livista, you go through them all. I don't want to get quoted on this, but I would suggest to you that they're not having an easy time of it either. And in fact, none of them started building or anything yet. So no, I think what's happening is the demand's building and building and building, but none of the supply side, i.e. us, the lithium refiners have really kicked on. So the market opportunity, which was the question, is probably growing. It's probably getting stronger.
Thank you, Paul. Okay, I'm dismissing this. Okay. How much runway does the company have with these directed loans and debt? Basically, how long can we wait for the mezzanine to land before alarm bells start ringing? Another one would just ask how much you're willing to lend the company. So yeah, those two first. There's lots of questions coming in now. Please stay away from mezzanine timing now. I think they're still coming in, so I think they've been answered.
So I've put $1 million or something into Pensana, and subject to permission from my daughter, I'll keep funding Alkemy for as long as it takes. This is such a good business opportunity. I'm very happy to provide the support. Yeah, so I'm happy to continue supporting it.
Thanks, Paul. Salaries.
We're not drawing any salaries, by the way.
Yeah.
So,
how long can you continue to not draw salaries? Yes, I think we've done that. Can ALK be funded from mezzanine funding at all? Okay, must be right. The same ones. Okay. Somebody's asking about the value being delivered from Vicky Jekyll and the amounts payable to her for her work. Are we getting good value from her?
absolutely, very, very good value. We probably got the best offtake book in Europe, not least of all the other things she brings. So yeah, no, tremendous value.
Can you go into a little more detail about the feed, what the feed is, and then how long it takes to complete?
So the feed study will take 8 months. What it comprises of is taking every piece of equipment that goes into building the plant, crystallizer, kiln, power supply, reagent supply, all of those things, and turns them into a contract with a equipment manufacturer or a supplier or a set of services. So basically turning a study into a deliverable project that you can finance. So when you go to the bond financiers, they look at it and they go, show me who's going to supply the crystallizer, show me their fabrication slot, show me the performance guarantees that they're going to supply you with you, et cetera, et cetera, et cetera. So for every one of the equipment packages that you have for the project, the feed study takes it to a point such that when the bond financiers look at it, they go, okay, we're happy to lend to you to go and take on that piece of equipment or that contract, whatever. So it's turning a study into the engineering of a project that can be financed, and it will take 8 months.
Thank you, Paul. Bob Hope's asking, can you confirm that you're not taking a salary?
Yes, I can.
Okay. Will the financial support by Paul be in return for additional shares?
No, it's a loan, so I get paid back a loan. I'm not sure the previous loans were interest free. So, by the way, if anybody else would like to jump in and provide these loans and come and work for no salary and provide loans to the company interest free basis, you're welcome to join the team.
John, sorry, your hand was up. I wasn't putting you forward for the team, but I'm sure you'd love to find out a bit more. Yeah, please. Did you want to ask a question?
John, sorry, it's just sorry. Actually, keep with the questions keep being asked and well answered. So there has been a bit of talk on the boards about Vicky and what she brings. So I'm really glad you answered that one, Paul. I do think that some people think you can do these massive projects just by praying, and so it's kind of Vicky's doing a tremendous job, and to have the best offtake book in Europe, and I'm no doubt she was involved in the feedstock as well. The other one was just make sure there's no confusion on this. The MES finance, that's not for G&E, is it?
No. So that's right. Thank you, John. So it's as I explained, the 8 million goes into the mezzanine finance. It doesn't go into. There's a bit of crossover there, John, because some of the costs going into the mezzanine will come back up to a very small amount, will come back up to G&A, what people call G&A. But in principle, the vast majority of it goes towards the front-end engineering design, and only a fraction of it comes up to G&A.
Yeah, cool. Thanks.
Thanks, John. Paul, I think your questions have been answered. Please, I'm going to delete it. Please pop it in again if in a different way if you want to go through it. Okay. So, Paul, how's recruitment going? Will that kick in when the mezzanine lands? From someone who has met Vicky recently, says she is just quality. Okay, so reaffirmation on Vicky there.
Thank you. So we have a long list of so we have part of the requirement for the bond finances. Again, people on this call will be familiar with this. Is we have to put an organogram. We have to show the team that we're going to build the project with. So we have that organogram that's showing the team, and we have a long list. Soon to be a short list of candidates from CEO down to populate Tees Valley Lithium first train company. So, and sorry, the question was when will it start? Yes, as soon as the mezzanine kicks in, we'll start putting those people on board.
Okay, thanks, Paul. Question here on published timelines on finance, construction, and production, saying they've slipped again significantly. If so, what are the new timelines for construction and production, etc.?
So the timelines of construction and the actual construction bit haven't changed. They are what they are. What's slipping is the mezzanine finance, and as I said, timeline for that I just can't give you one. I just not in a position to provide that information, and unfortunately, it's something that we're all going to have to grin and bear until we get the mezzanine across the line.
Thanks, Paul. Okay. You say that the documentation is nearly complete with a company. Is that company all we need for the mezzanine? So will that be the whole of the mezzanine for the documentation?
Yes. So for each of the mezzanine finances with potential mezzanine finance we're talking to, there are all that we need for the mezzanine for each one. So it's not like we need two mezzanine financiers for the mezzanine finance. It's one of these will land and they'll provide the mezzanine finance.
Thank you, Paul. I've been emailed some questions as well. Sorry, I'm getting them from texts, emails, on Zoom, through Telegram. Okay, they're the same questions that have been put in, right? Sorry, there's another one. Yeah, he's asked if there are multiple parties interested in providing the mezzanine finance. Okay, that's been answered as well. Would anyone like to raise their hand to talk? I'm going through questions on mezzanine finance again. Is there anything on the horizon for Train 2 lithium?
Yeah, there is actually. So the demand, as I mentioned, we've got demand that's offtake for 2 to 3 times the 24,000 tons per annum for Train 1. So we are when we get approached by people who want to use the facility, we indicate to them, you're now looking at trains 2 and 3, not train 1, because train 1's already catered for. So very preliminary, but obviously a growing interest, given that, as to the previous question, there is no refining capacity in Europe on a tolling basis that's available. And just one other difference is that we don't take spodumene concentrate. There's this spodumene that gets mined that is 5% lithium and 95% waste getting shipped around the world. We don't take that. That's not what we do. We don't think loading up the world shipping industry with 95% waste makes any sense to decarbonize the car industry. So we take either primary lithium sulfate or a lithium, what Vicky calls technical grade carbonate from South America, which is 95 or 97% lithium. So we're bringing in a very, very high value product and then just turning that into a hydroxide, lithium hydroxide, or a lithium carbonate, battery grade. We're getting increasing interest from people who recognize that I think we're the only refinery that does it. There may be others, but we think there's not obvious who else does it. So we're getting a lot of interest for that. And it's clear that I think we've chosen the right technical business model, rather than trying to move very large quantities of waste around the world. We're only dealing with very, very high grade lithium product going forward.
Thank you, Paul. Couple more questions on TVG. Did I just read one out on graphite? Sorry, I've been confused. Oh, was that lithium? Can we expect the joint venture to become binding shortly, or will that wait until after the 12-month study?
So no, really good question. So that's right. So it's an unincorporated joint venture to do the study, and then we do the study, and then if it all works, it goes into a binding joint venture agreement, as the question asks is exactly right. So unincorporated joint venture initially, do the study, and then if the study works, if there's an investment decision, then we go into a full-blown joint venture agreement with Cyril Resources to build a graphite facility.
Okay. Is it really necessary to take 12 months for TVG study, given that it's replicating existing facilities?
Yeah, good question. This Cyril are very, very experienced company, and I think the answer is that's what they're saying. So if they think that's what it should be, then if it's 12 months or longer, then we have to respect their call on that. So the answer is yes, it probably will take 12 months or longer.
Okay. Is the relationship with Weardale Lithium still on the cards?
Yes. But both of the two players up there, we are in discussion with, or have some form of understanding with. We recognize what they're both doing. We think what they're both doing is really interesting, genuinely very interesting. Where we think they could get to, we're not saying they will, but could get to, is they could end up with lithium in solution that's not battery grade. It could be like the technical grade carbonate, or it could be an intermediate product like a chloride. So we're simply saying, look, we're a refinery that can take it from that position to a battery grade product. Plus we have the advantage of hopefully by then very well developed customer relationships, so that if we've built to get accredited to be able to sell a chemical to a cell manufacturer or any other form of OEM takes a long time, takes a lot of accreditation, and that's some of the work that Vicky's been doing for us. So the idea that you could pull a brine out of northern England and turn it into a chloride or a carbonate and then sell it to a cell manufacturer is challenging, because it takes a lot of accreditation. What they could do is produce an intermediate product and then sell it to us, or toll treat it through us into a finished product. So I think anybody who is producing a brine in the UK, and we're actually talking to another party in the UK actually along these lines for exactly the same thing. And again, it's Vicky. Vicky's, and it wouldn't surprise me if we announced another one of those deals, is that to be able to take your technical grade brine product, whatever the chemistry is and whatever the grade is, and for us then to, on a tolling basis, turn it into a carbonate or a hydroxide that can be sold to the cell manufacturers, then that's attractive, and that's our business model. So, as to the previous question, we've had a growing interest from parties saying, "Hey, your model. We understand why your model is important. We're going to produce this lithium in whatever form it is. Can we talk?" So I think you're going to see more of that. It won't be just Weardale or Northern or this other group we're talking about. I think you'll see even more people wanting to talk to us.
Thanks, Paul. I've got 3 more questions. First one, a couple on Alex Della Bosca and her position with the company. I can reassure us Alex is very, very good. Paul, do you just want to take away what she does?
So Alex was, when she lived in the UK, she was marketing manager for Marks and Spencer, and has been one of the early movers in the part of M&S's turnaround. In terms, I think you've seen a spectacular turnaround for that company. She moved to Australia, and during the period between that job, the M&S job, and her new job, she has been providing marketing services to Alkemy. But unfortunately, we'll lose her because she's been snapped up by a major corporate to go and continue her career. So we had the advantage of Alex for a short period of time, and she's done a fantastic job. But she's probably a bit too high-powered for us at this stage. She's been poached by another major corporation.
Yeah, that's a shame. She's very, very good. Okay, so Paul, you said second last question, I think. Paul, you said the feed will take 8 months. Are you expecting to start it this year? I think it's that's a good question.
Yeah, so as soon as the MES lands, then we'll start the feed. We're ready to go, and there's a lot of people waiting for it.
Okay, so final question from John. I noticed your hand's up. I don't know. We can maybe finish on you after this one. Paul, thanks for this. Very excited about the potential here. What would you briefly say that as a takeaway from this call to reassure investors who are worried about the recent share price drop and the fact that the mezzanine financing is taking so long?
I'd worry more about the mezzanine financing is because the share price will look after it. Once we announce mezzanine, I'm pretty sure the share price will look after itself, and the kind of leverage is fantastic. It's great. We've only got 8.8 million shares on issue. So as painful as it is, unless you want to go on the market and buy more, then I wouldn't worry too much about the current share price. I would worry more about looking out for when mezzanine lands. As soon as it lands, then as far as I'm concerned, we're away. We've got a clear pathway to the kind of numbers that Zeus is talking about. Up until that point, there will be uncertainty, and there will be people who sell the shares or people who create uncertainty around that, and that's understandable. I get that. But when we do land mezzanine, which is the key, and get going on the feed, then I think we're away.
Thank you, Paul. So you're asking us to have a bit of faith in that because you're advancing things quite well, is what you're saying.
Yes. Well, I'll keep, as to the question before, I'll keep funding it until we get there.
Yeah. John, your hand's still up. Is this is that with your enthusiasm, or is it just you left it up? I can.
No, it's just pure enthusiasm. But I think the last question, the answer really should have been the one that summed it up. But maybe just touch on this, Paul. Just to confirm, permitting for Train 1 is in place.
Yes. Yes. So I forgot to mention that. That's good point. So we know we're fully permitted for train. We've actually fully permitted for all 4 trains.
Oh, really?
Fully permitted.
Good,
That's
thanks.
great.
Just seen some noise about that as well, so that's great.
Yeah, well done, John. I saw someone bring that up earlier on. Okay, I think Steve's just come in with a final one. Is the £10 per share prediction for a fully constructed train one only?
Yes. So the numbers are, those of you who got the Zeus report. By the way, we're about to sign up for this thing called Research Tree, which then enables private investors who are not clients of Zeus to subscribe to it. I don't think it costs anything. And then you can access the research that Zeus are doing on Alkemy. But as per the research report, Zeus are assuming that we get diluted down to a 50% interest in train one. And then the valuation is around £10 per share on train one only, based on a 50% interest.
Very good. Okay, I think that seems to be everything that's covered. Okay, thank you very much, Paul.
Well, thank you, Sashi. Just before I go, this is about an hour, so and it's been incredibly helpful for me to understand people's concerns. Sashi, I'll leave it up to you, but if there was an interest, I'm very happy to do this on, say, a monthly basis or whatever shareholders felt it was be useful for, because whilst I can't say anything that hasn't been announced, I think it's sometimes helpful to be able to add a little bit more color or maybe reframe the answers in a way that allows people to understand at least what we're thinking about how things are. So very, very happy to do this again. I thank everybody for jumping on the call, and thank you for all your questions.
Thank you everyone for joining, and thank you, Paul. And we'll definitely, try and book something in with you in the near future.
Very good. Thank you very much.
Thanks all.
Bye-bye.
Bye.